Hey everybody, welcome to the channel. Hope you guys are doing well today. In this video, I'm going to show you guys an easy way to get safe yield on a DeFi protocol. Some of you have probably heard of Anchor Protocol. In simple terms, it's a savings protocol built on the Terra network. And since its inception, its APY on UST has ranged from 18 to 21%. And if you're interested in learning more about the Anchor Protocol and the Terra network, make sure after watching this entire video, you guys go ahead and check out the playlist that I've linked in the description below. But the problem with DeFi protocols is that since they're very new, they could be subject to smart contract hacks or economic attacks. And as a result, many users are resorting to insurance. This way they can be made whole if anything happens to the protocol. And in this video, you're going to learn about 2 insurance products that'll help protect your deposit value so you could sleep like a baby at night. And after this video, if you have any questions, or maybe you just want to connect with like-minded individuals who are also seeking out yield in the DeFi space, then you should definitely consider checking out my Discord. Not only is it a good place to network, but a lot of the Giga Chads in there also share updates about these protocols and are constantly dropping valuable insights. But if you're not interested in getting a Discord account, at least check out my free newsletter. Not only do I cover DeFi topics, but I also cover centralized lending platforms like Celsius, Crypto.com, and many others. In fact, every Saturday I try to update you with the latest rates, and by clicking the link provided in that newsletter, you'll be redirected to my website where I've organized all the yield rates across all the lending platforms that I personally use. Both the link to my Discord and my newsletter can be found in the description below. With the intro out of the way, let's go ahead and dive into this video. Alright, to begin the video, we're going to talk about Anchor Protocol for just a brief moment, just so I can bring all the new users a little bit up to speed. But if you're familiar with Anchor Protocol, I do have timestamps in the description below, so feel free to use them to jump to the next segment of the video. So here on Anchor Protocol, if you deposit your UST, which is the decentralized USD-based stablecoin for the entire network, you're going to get this APY here. And like I stated in the intro, I've seen it range from 18 to 21%. And since all of this is very new, and even the mechanism to maintain the peg between this stablecoin and USD is novel. So because all of this is very new and all of this is done via smart contracts, there's a chance that a potential hack or an economic attack could drain the deposits in this protocol. We haven't seen it hack yet, but when Luna, which is the token for the entire Terra network, took a huge nosedive, for a moment, UST did depeg from the dollar. And that's because Luna collateralizes all the UST. And when Luna falls in price, more Luna basically has to be minted and emitted into the circulating supply to make sure that all the UST is sufficiently collateralized. And if you take a look what happened a little bit after Bitcoin crashed, Luna crashed soon afterwards. And I think that depegging had a lot to do with the fact that it crashed so much and so fast. But what I thought was pretty amazing is that without any sort of intervention from the team, the peg was automatically restored via the mechanism that the team had implemented. And it was actually a pretty good learning experience for the community and the team. And soon afterwards, they took decisive action to make sure that a future event like this would be mitigated. With all that being said, if you're still interested in getting this double-digit APY, I'm going to include a few links in the description below that are going to help you get started. For example, the first thing you're going to want to do is create a wallet. You can download the desktop version, you can download the mobile version, and also there's a browser version. The next thing you're going to want to do is fund that wallet. And to do that, you can head over to an exchange that supports UST and Luna, or you can go ahead and use the Terra bridge. Many of the assets on Terra have the wrapped equivalents on Ethereum, BSC, and Harmony. So what you could do is buy those assets on those chains and then go ahead and transfer them over to the Terra network. Now in this segment, we're going to talk about Unslashed. Let me give you guys a quick tour before we talk about the insurance product. So basically what they do is protect users against smart contract hacks, depegs for stable coins, and other events that could lead to losses for people who are depositing their assets into these protocols. So basically what you do is you first decide how much you want covered. And unlike other insurance products, you can only choose ETH and not DAI here. Once you decide how much ETH you want covered, then you go ahead and pay a premium cost, make a security deposit to get insurance coverage. And so just like with any other insurance product, you have to have a counterparty on the other end who's willing to pay up in the event that the user who's getting cover has a successful claim. In fact, as a user of this protocol, you guys can go ahead and be that counterparty and be paid interest. So for example, let's say you thought that the UST peg was unbreakable. By supplying ETH, you could be the counterparty to anybody who's out there seeking insurance. Either you can go ahead and go through the single pools here and supply ETH, or you could deposit funds into the Spartan bucket, and by doing that, your ETH will be automatically distributed to multiple pools. And in return for being the counterparty, you're projected to get a yield of 15.27%. 2.1% is coming from users who are paying the premium. 9.5% is coming from the liquidity mining incentives offered by this protocol, and this is paid in their native token USF. And thirdly, what they do is they take your ETH that you deposit and everybody else's ETH, and they put it in a asset management strategy. In this case, they're using Enzyme Finance, and through Enzyme Finance, they're able to get low risk yield on all the Ethereum that they have deposited with them. And this is going to increase capital efficiency. Rather than your ETH just sitting in a smart contract doing nothing, it'll earn interest utilizing low risk yield strategies. And by the way, if you guys want to learn more about Enzyme Finance, I did a video on them last year when they were known as Melon Protocol. And to access the video, you guys can go ahead and just click the upper right hand corner of your screen. So now that I've given you a brief introduction, let's go ahead and cover how to get insurance for the Anchor protocol. On the Get Covered page, you're going to be given a series of options. Go ahead and select UST peg. Now I do want to emphasize that this covers the peg, but let's say there's a smart contract or an economic hack. The odds are you're not going to be covered. But anyhow, let's assume that your biggest worry was the UST peg. In that case, you would enter how much ETH you want to cover on UST peg. So let's say it was 100 ETH. You would have to pay the prorated premium cost for the month, plus you would have to make a security deposit. And the reason they do that is because this premium for the year, it fluctuates month to month. And depending on what the price is going to be on the rollover date, they'll automatically go ahead and deduct that amount from your security deposit. So don't think that this premium price is set, because the covered amount is recalculated for the new 30-day cycle. Another thing I would do before proceeding is read the policy document. Here they'll give you a detailed description of what's covered and also what's not covered by the insurance. And if you notice here that they talk about smart contract hacks, meaning that this insurance product only applies to the peg. So in this case, that means if the UST is trading below 87 cents on CoinMarketCap, Coingecko, or other reputable sources, and also if the loss on UST dollar peg results in a time-weighted average based on the market data extracted from reputable sources below 87 cents in a 2-week span. And of course, the loss has to occur during the policy period. Now, if you're looking for smart contract insurance, then you guys should check out Nexus Mutual. And in fact, if you wanted to get both UST peg insurance and also get smart contract insurance, I wouldn't blame you, because currently the APY is 18+%, and assuming that the current premium prices remain somewhat stable, you're looking at paying less than 4 to 5%. The reason I'm even mentioning that is because on Unslashed, you can only get coverage for the peg. Nexus Mutual, on the other hand, only covers contract bugs, economic attacks, and governance attacks. What they don't cover is UST depegging. So in order to get comprehensive insurance, you're going to have to get both Nexus Mutual and Unslashed. In terms of paying for your premium, you have a little bit more flexibility in which currency you can pay with. You can pay with Ethereum, NXM, which is the native token for the Nexus Mutual protocol, or you can go ahead and pay in DAI. And the process to go ahead and take out coverage is pretty simple. All you need to do is enter the amount that you want insurance on. And once you enter in the covered amount, then you go ahead and decide how many days that you want coverage for. You don't have to commit between these 3 options that you see here. You can just go ahead and enter in the amount of days that you want coverage for. But for simple math, let's say that you wanted coverage for an entire year. That would cost you almost $2,600. So that's about 2.6%. And if we add 1.4% from Unslashed, that's about 4% that you're going to be paying. And currently with the APY sitting at 19.5%, you're going to be netting something close to 15% APR. And if you scroll down to the bottom of the page, just like you had documentation with Unslashed detailing what's covered and not covered, you'll get the exact same thing. And aside from the peg, what they don't cover is basically anybody trying to game the system. I'm not going to go through everything here, but based on what I've read, it seems like most of this applies to people that are looking for a loophole. Now, after watching all of that, if you guys have any questions, or maybe you wanted to see what other people's experience was like, Within my Discord, I have an entire channel dedicated to the Terra network. You can definitely post your questions, inquiries in here. And for the most part, if you couple my Discord with all the videos I have, you can pretty much learn everything for free. But if you're looking for supplemental information, or you wanted access to the private Discord channel I have, by signing up for the lowest tier I have for $20 a month, you'll get a free subscription to the paid version of my newsletter and access to my private Discord channels. And whether you're looking for more guidance or maybe you're just looking to streamline your learning about the DeFi space, by signing up for one of the higher tiers I have, you can get one-on-one dialogue with me. If you don't see a package that works for you here, just reach out to me on Discord or Twitter and we can set up a customized package just for you. Well, that pretty much wraps things up. I hope you guys enjoyed this video. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.